Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Setup Sunday upon us once again. The most jam-packed, chart-filled, inverted head and shoulders video on the internet. I had to hold myself back this week. That's how many good-looking charts there are. IMHO. First, we'll start with Google Trends for Bitcoin, which has been making the rounds because it is very dull, very boring, very low. Historically, this is a multi-year low, and I love it. I'd love to see nobody here. Much better look to see a low Google Trends than if Google Trends was at 100 and price was declining. Generally what we see throughout a price trend is a rise in interest because you get more articles, you get more people doing research, and you can say, oh, everybody knows what Bitcoin is by now. Maybe, but there's always articles, there's always people talking about it, and that will pop up here on Google Trends. So I will bet you 21 million BTC that whether or not we go up or down, we will see a jump in Google Trends. We may get as low as 11, just like we did in October 2020. I don't think we'll get that low. That was also just before an election, so it's certainly possible. But even if we do, great. There was a couple papers a few years back that basically showed there was a high correlation in the spike of Google Trends in the 80s and the 100s to the end of a run. And that makes sense because it essentially becomes a crowded trade, and that's a way of looking at how crowded the trade is. So something to pay attention to. If we break up or down, I think we'll break up. I'm positioned for up. Responsibly long, not irresponsibly long per se just yet. Looking at the performance since cycle low, we are underperforming 2015 and 2018 cycles. We're about where we should be. I don't think there's anything super concerning. We can catch up very quickly on a breakout trade here with previous cycles. And then the real fun begins on where this ends up. There is a decent possibility that we end up in the 300K level. We'll talk about that. It's not going to be a surprise or a secret. In 2015 to 2018, I don't know too many people who are talking about 20K at that time, if anybody. This time, it's going to be a little different. We have people talking about 300. We've had people talking about 300K for a while, so I'm sure there's going to be people front running that. So whether or not we will actually get there, we'll see. But the TA gives us some clues at where this could run and meet its eventual end later on in the cycle. But we have at least one good thrust here if we do move higher. If we look at this slightly differently, price relative to US election years. So this is 1 year plus or minus presidential elections. And yes, these are also halving years. That's just how it happens to be. But looking at how price reacted to the election, things really started to get cooking post-election. Now you could argue in 2020, we were well on our way making local multi-month higher highs there. But for the most part, there's probably a higher likelihood that we start to see a real move in price post-election, not pre-election. Not that it's impossible. It's just especially with how this is sitting, if this is actually 50-50 based on electoral college or not. I don't think anybody's too sure, and markets hate uncertainty and they just rather wait to see what happens. And we probably won't know the day of, the night of. It'll probably take, I'd imagine, a week to figure out the final count. But this is how Polymarket has it playing out currently. Looking at the ETF flows from last week and week over week, we did have a positive 350 million last week. That's all we need, right? Just consistent flows. We don't need $1 billion every week. We don't need $2.5 billion every 6 months. We just need slow and steady wins the race. And eventually we will break out. I said this a couple of weeks ago, but it's kind of a catch-22 because we need to start to break out to bring the money in. But in order to break out, we need money to come in, right? So either the speculators and the margin degens are going to push us higher, and then that's going to trigger money coming in, and we'll take a look at how to measure that against the comps, against the SPY, the Qs, and gold, TLT. So it's either going to take that for the breakout to happen. Maybe it's going to be the MSTR nonsensical nonsense that's going on. Maybe that's a foreshadowing for things to come for BTC. Miners starting to look a little bit better. Around the edges, we'll take a look at that today. But as long as flows remain consistent, we will break out eventually. There's no doubt in my mind, regardless of who's selling every day. I believe there's one of the very early miners, could be Laszlo, could be somebody else, but one of the very early miners is selling like 50 to 100 million every day here. And they've got a bunch to sell, and that's within anybody's right to sell. You got to remember, a lot of these Bitcoiners are getting older, and they have things to buy, things to do with their life. Looking at TA for BTC, we're still within the range. We'll take a look at that on the daily, but on the weekly, the cloud has no issues with this, other than just telling you we are momentumless. When you see the TK lines flat like this, when you see the cloud flat like this, it just says we are ranging just as we were in 2021 and 2022. So obviously the thing to watch out for on the downside would be a repeat of 2022, which would be getting crushed below the cloud. This was a period of increasing interest rates. So in the back of my mind, it's like, okay, if we see inflation pick up again in a big way, if we see interest rates rising instead of falling, that is part of this parallel universe of decision making when we're drawing the decision tree. That's always a possibility. That is not my likely or base case, but that is a possibility. Using the fibs, if we take the range here, measure it higher, we get essentially a number within 100,000, within 100K. That makes sense. If we treat this as a flag, we use this as the pole of the flag and use that, we get a slightly higher measurement. And then if we take this whole thing and use fibs from high to low, we get the big kahuna in the 200 to 300 range. And that sounds insane. It always sounds absurd in every cycle. But if we look at the power law corridor, that is also the top of the power law. So the odds that we go beyond that, I'm not so sure, but I think that's a great place to hold as a target for the cycle. You can see in the power law here, we're not even above, we'll call it the midline yet. And that's where the craziness really starts historically. So that's definitely something to watch coming up here down the line. We can also measure this as some sort of complex inverted head and shoulders monstrosity, some sort of Cronenberg, Lovecraftian monster of an inverted head and shoulders. Sure, right? It doesn't really matter. First, let's get the breakout. Let's get the higher high, and then we can follow it and track it as it goes along. But yes, there's all of these potential fib levels to watch. We also have the yearly pivots at 80.6 and 98.6, which are likely to act as temporary pit stops on the way up, just as they did at 52.4, at 62.7. You know, was anybody necessarily looking at these specific levels other than the pivots? I don't think so. That's why I really like the yearly pivots. They print on January 1st and they don't change the entire year. They are based on the previous year's price action. Post halving years, we do typically reach for the R5. So that would be above 100. But again, let's get to 67 in talk, right? Before we start our premature celebrations here. Thus far, it looks like we made a higher low. We'll see, right? We'll see. The cloud likes it. If we look at the cloud, bullish TK cross, bullish cloud, price above cloud. As of this candle, as of this day, I think it was October 3rd, we are in the clear as far as the cloud is concerned. It doesn't look pretty. It doesn't look amazing, but all of the cloud checklist was bullish, including the lagging span, which I don't have on this chart, but I checked for you lagging span enjoyers. The last time we were set up like this was May 21st, and that of course went nowhere and got denied at the diagonal. So can we break the diag this time? Will it be before or after the election? Right? I don't know. We'll see. We're watching it day by day, but it certainly leans more and more bullish. The longer it can stay above the daily cloud, the better. What we don't want to see is some headline coming in here. Oh, the US government is selling 90,000 BTC. Okay, well, I know where we're going. Then we're probably going to the bottom of the range or attempting to go to the bottom of the range. Seeing any headline like a massive supply unlock. Not welcome to news when we are still ranging and not breaking out. So definitely be on the lookout for that. Looking at the moving average, the 200-day, we're still slightly below. 20-week, we're slightly above. 50-day, we bounced, double tapped over the past few weeks. So the moving averages are condensing, tightening. You typically see this before a move up or down. Bull trends live above the 20-week, bear trends live below. So this isn't definitive one way or the other, but it just says, yeah, we're getting closer to eventually seeing something, just like the Bollinger Bands are telling you. If we zoom way out and look at all of Bitcoin's price history, and we measure the distance between the two bands here on the Bollinger Bands, this is the tightest this has been since last year this time. And based on history, volatility has only been this low a few times, 4 times. That includes 2012. We're as tight here on Bollinger Bands as we were in 2012. 2016, this was the ascending triangle mess. That was real fun to live through. This was post Bitfinex hack recovery. And we're even tighter than 2018, and that was miserable. 2020 was mainly sustained up chop. It wasn't super fun, but it wasn't as terrible and miserable as this has been, let's be honest. So we're certainly getting closer to a time in which you'd expect a move at all. Green here means it's foreshadowing a bullish move, a move higher. So the longer we can maintain prices above the 20-week, the higher the probability the end result here will be up instead of down. The hit rate is what, like 3 out of 5 have been correct, 3 out of 4 have been correct, but the Bollinger Bands don't get too much tighter than this. Now looking at like how do we get legacy TradFi money? When is legacy going to care about BTC in a bigger way? I would argue that if we break out of these channels, very similar to the spot BTC channels, this is Bitcoin against SPY, basically been in a downtrend since March. That makes sense. SPY has outperformed since March. BT is still up more on the year. But since March, if you're a capital allocator, given all the options, including alternatives, which was what BTC might be, or global macro, or whatever they call it, this isn't exactly a ringing endorsement for allocating it to BTC recently. So what would you want to see? Just a higher high here, right? And you could argue the same for the Qs. Anything out of this channel, anything resembling a higher high, anything to get the attention of money looking for a home would need a reason to allocate here, right? And we can look at gold as well. Now you could say, well, there's an inverted head and shoulders here. I'm not going to disagree, but I don't know if that's convincing enough for the gold people to look at this and say, oh, gold might be slowing down here. Maybe it's time to change up the allocation into digital gold. I don't know. And then lastly, your TLT, also in a similar channel-ish. TLT is the long bond. Zooming way out, we are beating the pants out of long bond. No question. But we're talking about right now in this 6 months of chop, what's it going to take to push us slightly higher? And it's going to be a combination of some bullish signal on these charts. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. And looking at the alts, looking across the list, we're starting to get charts that look better. Volume-wise, I always like to look at what does volume look like. Now, it is a Sunday. It is like a pseudo-holiday tomorrow. Bond market's closed, but legacy markets otherwise are open. It's a bank holiday. I think it's a federal holiday. Most of the volume here is still BTC, Sol, and ETH. SUI, Apt, WIF, Popcat, some meme stuff, some other layer 1 stuff. TIA we'll take a look at as well. But there are plenty of charts that look like this. And you know what I'm going to say? This, to me, is a textbook inverted head and shoulders. And if we just look at entry, exit, stop loss, you can either start to accumulate this as you are sure or semi-sure, as sure as one can be, that you think this is going higher once the right shoulder is put in. I mean, it looks pretty good here. I currently own 0 ENA, but yeah, this is a great trade to take. Stop loss would be below the shoulder. The target would be a measured move higher, 60 cents to 75 cents. That's plenty, right? That would be a 50 to 2x percent trade from here. It's not alt season, but it's something. And there are a lot of charts. We'll take a look at a few of them after this, but there are a lot of charts that look like this. I just know there are a lot of eyeballs on this. There are a lot of eyeballs on TIA, and I've got a chart coming up here that lays this out. But is it pretty? Is it beautiful? Is it textbook? No, but yeah, like I could see this going higher. Why not? Why not? Rounding out some of the legacy BTC analogs, if we look at MSTR, MSTR is expanding on the NAV premium, which means it is now worth, the company at least, is worth 2.8 times the BTC treasury. That is still baffling to me and a lot of people. Not really sure what's going on there other than accessibility. People would rather trade this than the other 2x products. Fine. I don't know how much more that NAV premium can expand. I just said throw out a number that 4x, sure, possible. I don't think it'll go to 10x more than BTC treasury, but the NAV could continue to expand, or BTC could play catch up, and this is leading the spot market a little bit. That could be the case. I hope that's the case. I hope we don't see something silly where this goes without BTC all the way to 300. I doubt that's the case, but just looking at this chart in isolation, it does have a very clean range pitchfork that goes back to like 2022. It's consolidated above the cloud around the midline of the pitchfork. It looks better than just about anything out there. This is not an all-time high yet, but it's getting there. And the measured move here is 300 to 400. So none of that's going to change anytime soon. The only thing to watch out for here would be, what does the Williams Fractals trailing stop losses look like? Is there a bear div? Is there a reversal chart pattern to watch out for? I don't see any of that just yet, but that's stuff to watch for throughout the week. But overall, this chart looks great, looks excellent. Looking at CME, BTC futures, not much different than spot. Still in the range, still holding above the cloud. You don't have all the bullish cloud signals just yet here, but it measures essentially to 100K on CME futures. If this, then that. If we get a breakout, that's where the measurement would take you. IBIT, very similar here. Bullish on the cloud, still in the range. Not fully bullish on the cloud. And maybe it's important to watch this other stuff because the legacy money is going to be looking at the trend metrics here versus spot, probably, if I had to guess. They're probably more concerned with CME futures and the ETFs and MSTR than necessarily the spot markets. And we're just looking for landmines. We're looking for things that look different, and everything looks just about the same. So it's not going to be a surprise when everything breaks out together. This is BITX. Again, why do I look at this? A lot of people are asking me, who cares, right? But we're just looking to see, does this look different at all? How does this look with the volatility drag? How does this look with the fee component? Clearly, it's a more angry down channel here. But it has similar characteristics of trying to get out of the range, some sort of ascending triangle and or inverted head and shoulders, still below the cloud, has a measured move decently higher. So for the most part here, still the waiting game. And for ETH and Sol, it's also a waiting game. ETH ain't going nowhere till it's above 2,800. I don't really care. It doesn't really matter. Till it's above 2,800, nobody should really care about ETH. Same thing with Sol. Until Sol's above 160, nobody should really care. These are both inverted head and shoulders in the making. So yeah, this could lead to Sol to 180 and then Sol to 3,400, right? Just like MSTR. But right now, the story is MSTR, and my guess is BTC is going to lead ETH and Sol at the very least. Now we do have some other coins that are leading BTC. TIA, not one of them, but TIA does have, like I said, something going on here. It's some sort of bottoming, ranging process. It's multiple months of holding this level. This measures 12 to 16. Fine. Again, it's a breakout trade, and or whenever you think as a trader that you're ready to go. AVAX as well. This is a coin I haven't mentioned in a bullish fashion in months and months and months and months. Previously, it had this mega head and shoulders that a lot of the layer ones did. That broke down, roughly reached the target. And since then, it's tried to put in a bottom here. And the daily cloud says, yeah, why not, right? Bullish cloud, bullish TK cross, price is still in the cloud. It's also printing a reversal pattern, something to watch for. Is it going to outperform the world? I have no idea, but it's something to watch throughout the week, certainly, as we're starting to see some alts here wake up a little bit. Another one I was just scanning would be HBAR, down significantly from the April highs, also trying to put in something. I don't know if this will be successful. I think it's a little too early, but definitely worth a watch list mention at the very least. Anything that can hold levels for 6 months, I'm all about. So into November, December, this might be ready to go. That's why it's worth trying to identify these charts ahead of time. Now, Aptos did have that triple bottom, nice neckline, flat, broke out of the cloud. And a lot of these charts now have the risk of rising wedge, bear div. Be careful. The cloud cliffs are also targets based on 50% of the retrace here from high to low. So that's roughly 13. But this has definitely got a bear div, as does SUI. SUI has a significant bear div along with Tau. Trailing stop loss here would be 176 based on daily Williams fractals. But it's getting to the point where things are starting to get a little silly. You know, they're starting to get a little silly, especially without BTC breaking out. Things are getting extended. Now the candlesticks look fine. The chart pattern isn't like a slam dunk rising wedge or anything, but I would be careful up here on this one for sure. And Tau doesn't look as rising wedgy to me, but it's already tripped one of the trailing stop losses. And this may just sort of level out and do nothing. You know, it's hit the triple bottom target. It's still bullish on trend. It's just how much more can you expect after moving from 300 to 600, right? Trailing stop loss on this looks to be about 500. So I'm sure there's lots of other charts I didn't mention. Anything that looks like ENA, love it. Anything that looks like AVAX, love it. And some of these other coins that have already broken out, I would just be careful, look for RSI bear divs. Looking at DXY, alts have been strong in the face of this. Alts have been strong in the face of this massive DXY bounce. This was off the back of the strong jobs print. BTC also fairly strong, I guess, off of the DXY move higher. What we don't want to see, if you're bullish, is a move above the daily cloud here on DXY. The read here at this point is just neutral. There's nothing really else to say. It's kind of reaching for the midpoint of the range. But I'd imagine DXY in the near term above 105, 106, 107, and that's probably lights out for any expectation of BTC moving out of this current range. Along with DXY, we've also got the 10-year yield, which is strengthening. We do not want to see this back above the high time frame cloud. I'd like to hope and assume that a lot of this is just mean reversion after a quick move downward, but it's definitely something to watch out for this week, the rest of the month, the rest of the quarter. If, let's say, for example, oil goes to 95, I don't think BTC is going to be happy. Dollar's going to be up, 10-year yield's going to be up. Oil looks more bearish than all of them, DXY and the 10-year yield, but all three generally correlate together. So what would it take? Increasing geopolitical tensions, an end to the expectations of additional interest rate easing, stuff like that, and then we could probably see DXY, 10-year, and oil go higher. Looking at S&P futures, they look fine. I don't see a great trade still here. Anytime you make a flat top and break out, sure. I've said for the past couple of weeks, not my favorite trade is the index here, but it's great that it's bullish. We could say that much. Creeping higher is fine. What we don't want to see is just crazy spikes higher. If this starts to flatten out, we will get a TKC clamp, which means a potential mean reversion to 5,500, but that's down the road. That's not now. And if this continues, we're talking about 6,000 in the near term, and that's leading the NASDAQ, leading QQQ, etc., which is still below all-time highs, but does measure decently higher. So the indices look okay. Then when we come to NVIDIA, if we revisit this old idea of will this morph into some sort of head and shoulders, which I had talked about, I think in August, it broke down from the first attempt back above the cloud, and the cloud is again telling you, hey, dear trader, this is still bullish, this is still bullish, no guarantees, but if this goes higher, the cloud very clearly is saying we're still bullish. This does measure essentially to 180, 200, something in that region. And if we measure this as a flag or an equilateral triangle or something, we also get a measurement to around 200. So NVIDIA remains the strongest to me of the Mag 7, still looking great. IGV is another one that I've talked about for weeks and weeks and weeks just because it had this really strong chart pattern, cup and handle that made fresh highs, looks great, measures significantly higher. I don't have a chart for this, but SMH is trying to fully negate the head and shoulders there. That will probably be figured out this week, especially if NVIDIA goes higher. And NVIDIA higher is going to push the Qs higher. It's going to push semis higher. It's going to push AI chip stuff higher. It's going to push AI coins probably higher. So that's something to watch for throughout the week. We also had a crazy move from Uber off of the lukewarm reception from the Tesla Robotaxi event. I had liked this back here as an inverted head and shoulders, stopped myself out somewhere down here, re-entered the trade somewhere back in here, and it still looks fine. Still looks great. Cloud loves it. Clearly overextended, but that is an all-time high, and it does have a little bit left in the tank on the measured move, but you, again, want to watch for Williams fractal stop losses, any obvious bearish chart pattern, maybe on the 4-hour. But this is classic head and shoulders neckline retest moving higher. So Uber still looks good. As far as the miners, they are hinting also like MSTR. I hope this is all foreshadowing for spot BTC. That's the second time I've used the word hope in this video. So that's a dangerous sign right there outright. But looking at WGMI, the mining ETF also has an inverted head and shoulders. Not pretty, not great, but it's there. And anything above 20, and it's go time. 20 would also be above the daily cloud. So that'd be something to watch for the miner enjoyers. Some of these miners individually have better looking examples of an inverted head and shoulders. RIOT, I think the company is a dumpster fire, but it's also showing the chart pattern, right? And we also have CIFR, which looks very good as an example of an inverted head and shoulders. Cores, which I don't have a chart for, at all-time high last week. So there's plenty of stuff to do. Plenty of stuff to do. And if you don't like any of this, you can just sit in cash and collect your 5% or whatever it is at the moment. So what would I like to see from BTC this week? I would love to see a daily close above 64, 65. We don't need crazy breakouts immediately, especially before the election. I just want evidence that we're starting to get out of this range, starting to have the confidence to move into the high 60s. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.